Thanks for joining us for the Purdue University CME Group Ag Economy Barometer June 2024 survey results. I'm Jim Mintert, Director of the Purdue Center for Commercial Agriculture, and I'm going to share with you the highlights of this month's survey. The Ag Economy Barometer fell 3 points to a reading of 105 this month. That leaves the index down 16 points compared to a year earlier. And when you compare the first half of 2024 to the first half of 2023, the barometer so far this year has averaged about 11% lower in 2024 than it did in 2023. The current condition index rose 1 point compared to last month, but that still leaves that index 26 points lower than it was this time last year. And the future expectation index actually fell 5 points compared to May's reading and was 11 points lower than it was in June of 2023. When we ask producers what their biggest concerns are for the upcoming year, they continue to point to the risk of high input cost, followed by the risk of low crop and livestock prices, and then followed by rising interest rates. And when we look at the responses to this question in recent months, it's clear that more producers are becoming concerned about the impact of rising interest rates on their farm operation than what we saw earlier in the year. The Farm Financial Performance Index was up 3 points in May to a reading of 85. That compares to 82 last month and 76 back in April. And when you look at responses to the Farm Financial Condition Index question over the last several years, you can see that there's a little bit of a pattern with respect to the index having a tendency to bottom out in spring and then improve as we move into the early and midsummer timeframes. And that pattern appears to be taking place again this year. The Farm Capital Investment Index reading was 32 this month. That's just 1 point higher than its all-time low. When we followed up and asked producers who said they think now is a bad time to make large investments in their farm operation, why they feel that way, they continued to point to the impact of rising interest rates as well as the high cost of farm machinery and buildings. The short-term farmland value expectation index reading of 115 was unchanged from a month earlier, but that does leave that index down 11 points compared to this time last year. And when you look at the raw responses to the question used to derive the short-term farmland value expectation index, you can see that there's a rise in uncertainty, with more producers this month saying they expect to see values rise, as well as more producers saying they expect to see values fall, with fewer producers saying they expect to see values remain unchanged. The long-term farmland value expectation index fell this month, down 7 points to a reading of 152. That leaves that index 1 point higher than it was this time last year. And we followed up and asked those who expect to see farmland values rise in the next 5 years why they feel that way. They continue to point to the impact of non-farm investor demand as the number one reason. But we've included a new category in the response to this question, and that is the impact of energy production. This month, 10% of the producers in the survey who are optimistic about farmland values over the next 5 years pointed to energy production on farmland as a reason why. That compares to 12% that chose that response category last month and 10% who chose it in April. We followed up and asked producers if they've actively engaged in discussions with companies about solar energy production on farmland. And we've been asking this question since June of 2021, off and on. This month, 16% of the respondents in the survey said they'd engaged in a discussion with a company in the last 6 months. That's down somewhat compared to last month when 20% said they'd had a discussion, and 2 months ago when 19% said they had a discussion. When we followed up and asked what the rates being offered for farmland leasing for solar energy production, it's clear that there's been an increase in the rates that are being offered. Compared to the first time we asked this question back in June of 2021, far more producers are reporting rates being offered of $1,000 an acre or more. This month it was 69% of the people in the survey who said they'd had a discussion said they were offered a rate of $1,000 an acre or more. And fewer producers report being offered low rates of less than $500 an acre. This month, that was just 8% of the people who said that they had had a discussion. Comparing the percentage of producers who have engaged in a solar leasing discussion versus those that have engaged in a carbon capture, utilization, and storage discussion with a company, 8% said they had engaged in carbon capture discussions versus 16% who said they've engaged in a solar leasing discussion. We followed up with those who said they'd had a discussion about carbon capture. 93% of them said they were offered a rate of less than $25 per acre for a carbon capture project, but 4% of them said they were offered a rate of $50 to $75 per acre, and 4% said they were offered 75% or more per acre. That wraps up the highlights for this month's Ag Economy Barometer survey. You can get the full report on our website, purdue.edu/agbarometer, and you can also get more details on the Purdue Commercial AgCast podcast, which is available on all the major podcast providers and at purdue.edu/commercialag. On behalf of the Center for Commercial Agriculture, I'm Jim Mintert. Thanks for joining us.